Today I want to talk about our company called Investment Capital. We add US-based company stocks in our portfolio. We got very good performance, and I want to talk about our strategy, how we add, and what is the basic main aspects how we add new company stocks to our portfolio. We use quantitative and qualitative analysis very intensively. As we start, we have to first of all understand the business, how it will be look like in about one or business in the next 1 or 2 business cycles. Let's assume 10 years, right? And we have to be sure this company will be great in next business cycles. And so we use competitiveness of the company. It's very important to be very competitive. This is the one of the important aspect, because company what we add to our portfolio, company stocks must have durable competitive advantage. This is very important aspect. Company must be very competitive in the future. We also analyze management. It's very difficult to analyze management, but I can tell some what we use. For instance, if the company is run by owner and this owner has low wage, it's a very good sign. I love that, because this owner does not think to get as much wage as possible and run away. Just he thinks in a long term and how to create value. I think I look in that way. I don't know, maybe some investors, analysts look differently, but I have made my view of the how to analyze this management. It's quite difficult, as I already mentioned. It's quite hard to understand. But some companies will add also. Some companies have such great products that it produces or services that doesn't require very competent management, because product itself is very demanded, and doesn't matter how good competitive management runs the company, the product still be very demanded. Is very good side. Actually, some companies I can mention, of course, some companies such as can do products. Also, we use very heavily valuation. Valuation is quite very important, because if it's a great company but overvalued, it depends how overvalued it is, of course, but a little bit overvalued maybe we can consider. But if it's too overvalued, generally overvalued is bad. We looking for, of course, undervalued companies, but because if company is overvalued, it may take a few or several years, I don't know, maybe 1 or 2 business cycles to this value to grow and catch the price. It's very important. We use the few valuation methods, but depends on the company. Different companies require different kind of approach. It's not the same. Some people use one. I've had some I don't know, managers use one valuation method, valuing different companies. Some of them does not even know how the business is working, and still using just numbers to just somehow define the value. It's very difficult to define, because different industries require different kind of valuation. It depends on the company positioning. As a growing company require different valuation, mature company require different valuation, and so it's quite hard to understand. Some companies even does not have profit. How can you analyze? So you have to know how to approach different companies differently. It's very important. We got great portfolio because we had so good companies and our performance is so good. We just expect to have somewhere 20 to 25% annual growth on our portfolio. This is quite good. We don't go for very high risk. We actually love low risk and quite attractive performance. So we just don't risk some our money to somehow create great return, because sometimes risk and valuation does not define the reality, because sometimes people think if they go for greater risk they will get greater return, but it's not always the true, because sometimes if I find very undervalued companies, so this already for me very low risky investment. You can understand how I think about the investments. So we love low risk, higher return. It's some people may say it's impossible. No, it's not impossible, because if I define, I'm telling you, if I value and find great company, or maybe some panic may help me, like a pandemic recently helped me to buy great companies with very low prices. That was a very good experience, and I bought some companies which I did not expect about 5 months ago, 4 months ago, to have such kind of best opportunity. So value is very important, because if I buy great company and it's overvalued, I may start and waiting about 2, 4, 5 years, maybe 5 years to somehow get some return. So it's bad idea. But also I'm searching great companies. I don't like just something speculative companies which I buy and maybe I just value somehow to sell as quickly as possible to catch some return. No, and I love great companies, great businesses, have nice, great competitiveness, good run businesses, management to be very good, and with very nice prices. So we got such kind of approach, and our portfolio, as I already mentioned, have very nice performance recently, and we continue to grow. If you're interested to invest some even small amount, we don't require to invest big amounts. So you can contact me, and you can come, and we can talk about. I will talk also in detail how we value and how we define and how we find great companies. So it will be a very nice experience, believe me. So if you think it's good for you to diversify some of your wealth, because it's very nice to for diversification. Some of your wealth you can use here money to be more diversified. So you can come and talk to me. Thank you very much. Have a nice day. Bye.